Good morning, everyone. I guess you can hear me, it's loud enough. My name is Sebastian Taveau. I'm a chief technologist for a company called Warning. Has anyone heard about Warning? Show of hand. Yeah, you're like not neutral. So Warning is actually a consortium of banks in the US, owned by 7 banks. I don't know if you know some of them, like Bank of America, ring a bell, JP Morgan Chase, Wells Fargo, US Bank, Capital One, BB&T, PNC. Okay, so we're owned by fairly large banks. And what we want to talk about today is how the banks can still innovate. So it's going to be kind of very US focused. I've been in the US for more than 20 years. I've been in Silicon Valley for more than 20 years, almost 20 years plus. So bear with me, it's very centric to the US, but I want to show you how banks can anticipate the market and instead of becoming irrelevant, can solidify their position and relation with consumers. So when we talk about old school going next money, right, there is also something we need to define. We're going to talk about open banking, about open API, about open innovation. What is innovation really? You've seen in the previous presentation, by the way, it was mentioned, invention and innovation. A few years back, I talked about the 4 I's, the rule of the 4 I's, which were invention, innovation, integration, and imitation. Invention was the privilege of mostly academic research or research lab. Invention was the core of what change was about. Then innovation came on board. Innovation is when you take something which is not part of your industry, not part of your core business, you bring it to your industry and your core business, and you make it work. Then you have integration. Integration is when you take something from your industry, you integrate it to your business, and you make it a bit better than the guy that did actually innovation. And imitation, everyone knows what it is. You just take something that exists and you just copy it. No added value. So now that's where we're on you understand the scope of where innovation fit. And when we talk about open banking and open innovation, really the focus is not on innovation. We are talking about the integration part. How to take something in your industry and make it better. So if you look at that, I already mentioned open innovation, open technology, there are a lot of buzzwords that's been used. We heard a lot of them for the past 5 years, and nothing's are changing. However, everything that is important here is the collaborative economy exists, the sharing economy. And if you do not collaborate, if you do not work with other industry players, with your competitors, you cannot go into an open world. So transparency is important too. Just keep that in mind as we go along, and we're going to talk with Dave for his encore. So open innovation brings major change our way. This is kind of US focus again, but we all know about Tesla, right? I've seen a few in Hong Kong. This is electric car by definition. This is the greatest innovation in the transportation industry that happened in the past few years. We all know about blockchain, cryptocurrencies. Everyone's been excited about talking about that. That's been going on for what now? 5 years, 6 years? And for the past few months, everyone's been crazy about the fluctuation of Bitcoin. And then we have digital identity. We talk about that during this conference. Now, keep that in mind. This is innovation as we think it is today. This is the first electrical car, 1919. Actually, it was designed in 1914. It worked in 1919. Do you still think Tesla was the first big electrical car that was successful and worked? Someone was thinking about it before. That is the invention of electrical car. This is just a better integration. There is no innovation in Tesla. Keep that in mind. Oh, look at that. Does anyone know what this is? This is the Templar currency, the Knight Templars. Everyone knows about the Knight Templars? They invented banking. They invented cryptocurrency. They invented the movement of money in a secure way back in the 13th century. Mostly were giving them money. They were encrypted a note that no one could read except another Templar, so between Western Europe and Jerusalem. And you, as the person giving them money, you are carrying this note encrypted with some physical element in it that when you were going to the other counter, Templar counter at your destination, you could show it to the Templar. He was going to decipher it, and with the element he knew about, for example, this person has brown hair, blue eyes, he's about 5 feet tall, he's the legitimate owner of this money. Then they were giving you your money back. The money never really moved, but it was encrypted money moving around cross-border. 13th century, think about it. You still think that cryptocurrency is very modern and exciting? Yeah, it's a bit different. And now, it's digital ID. Everyone knows this lady or this man. Up to this day, we still don't know who he, she, it is. It may be actually Leonardo da Vinci. We don't know. And that's been going on for a few hundred years, right? So do we really think that today we're innovative enough to change the world? Or do we need to focus and learn a little bit more about the past so we can invent the future by understanding how to integrate it better, integrate the past to build the future? So now, going back from the US, there are things that are still happening today that are exciting, right? What do you think was the biggest innovation that happened last year? Every media is doing their 2017 best of what happened. You think it was the ICO coin offering that makes the biggest noise in the US? It makes a bit of noise, but not that much. Open API, it's coming. You think that's the big thing that was going on? I don't know. Maybe that was like Hyperledger, sovereign identity, how to manage your digital ID in the world, how to get like a passport for human, everything like kind of managed, through an Hyperledger. That makes some noise, or no? Do you think that was whatever this guy is talking about? Oh, no, not this guy, this one, sorry, this guy here. Well, maybe. Dave Birch has some knowledge on what's going on. He wrote a book about identity is the new money. Come on. Anyone has read that book? Available on Amazon? I was told I can't do any sales pitch about my company, so I'm doing sales pitch for someone else, right? He also wrote another book, Before Babylon, Beyond Bitcoin. That goes back to what I was saying. If you ignore and you don't know about the past on technology, on banking, you cannot understand how to build the future. And that book gives you actually kind of like very good overview of that concept. Now, that was what made noise last year, Zelle. Powered by partnership, innovation together. Zelle is actually part of Early Warning. This is the network that was created by Early Warning. It took us about until 2 weeks ago when we started a media campaign in the US to be recognized. We have had runnings in all the big major sports. NFL, playoff, whatever you can think of. So that's what makes noise. Is this something that is drastically very innovative and far forward thinking? Not really. It's a real-time P2P network. What is innovative in it is the banks got together and decided that to be relevant, they had to build a solution for their customer. And building that solution meant working together, but it also meant not to wait for regulators to tell them what to do. That was an initiative done in the US before anyone told them what was supposed to be the next generation of whatever it is. When I was saying that was integration, everyone knows that every payment network, every fintech company, you have to use the word fast, safe, and easy. Right? The joke is actually you can pick only 2 out of 3, but that's what we're building. Every other big tech company, payment company, they are going through the same thing. However, you really need to truly mean it. So what does that translate into? That was actually this number were published yesterday morning. So they're quite new. Is it successful? That was, again, very good integration between technologies owned by the banks to deliver a new product for customers. Is it successful? We launched actually in March, April with few selected banks. We went as a standalone app in September of last year, and we've been very active actually since September. Here's the number for last year. Do you know anyone that can claim to have moved 75 billion in few months on the network? 247 million transactions. That's not bad, The part that's the most important is we have access to the bank consumer because we are owned by the bank. We enroll 100,000 users per day. Make the calculation back to September. That type of innovation, that type of cooperation between the banks show that sometimes the legacy players still have a say, still can be relevant, still can build something actually that's got value to the consumer. That was goals that we set about 2 years ago. Are we meeting these goals? Are we going beyond expectation? We are. The adoption has been driven in such a way that these numbers can only keep going up. And that's just for the US market. Keep that in mind. So now that set the stage, these were all the players in that network, all the banks, 60+ banks. There's a number, I don't know if you can see it at the bottom, but the important part for the US way it works is like 80% of the online DDA. So for clarification, it's demand deposit account, not direct deposit, direct debit account. So the DDA account, we cover 80% of this. However, we have a reach for 97% of the debit customers in the US. That does help to have the banks, but we had to do it with partners. We work with processors. So I don't know if you know this, but in the US, there are big processors. We have key partnership with technology provider in the fintech world, Visa and MasterCard. You need to understand sometimes that you don't have access directly to a DDA. You have to go through the debit rail. And then we have ecosystem partners, Diebold, IBM, CGI, that provide us the scope of technology. And we work with other vendors for getting more data. We have access to a lot of data. We just aggregate them better than the other one, so we can deliver the service that's needed. That was the buzz. So I just wanted to set the stage to show you how sometimes we can think about innovation in the future, like 5 years, 10 years down the road. Sometimes it's just right there in front of you. You just have to look at what was happening in the past, just make it better, and integrate better. You don't have to be the greatest innovator, just be the greatest integrator. That being said, I would like to bring for his encore on stage Dave Birch, so we can have a quick chat and he can debug me.
Seb. Take a seat. So there's kind of two things I wanted to explore with you, with the audience. So one is, what you've shown is that open banking, or the moves towards open banking, actually the incumbents can be successful if they work together to integrate rather than innovate, as you just said. But of course, there's also the impact on the fintech challenges as well. So, and I'd like to kind of talk about both of those kind of things, because obviously we know in the real world, it isn't going to be the case that all the incumbent banks will go out of business and the fintechs will take over. Conversely, it's also not the case that a lot of the fintechs can really succeed, because when the banks work together and integrate properly, that closes up the space for the fintechs to operate. So let's start by talking about the banks themselves. I know the US is a very special and unusual case. I'm not sure how much you can extrapolate from the US market to other markets, but what was the stimulus for getting the banks to work together? Because for years people have been talking about doing something like this, and in the meantime, we had PayPal, which obviously where I first worked with you back in the old days, and then Venmo and so on. So what stimulated the banks to work together in this more effective way?
So I think I would say the aha moment, right, is the bank have a lot of assets, they have a lot of data, and early warning was one of these assets built by the banks as a common technology hub or risk hub.
What was it originally for? Because it wasn't for
It was
P2P.
actually for risk and fraud management detection.
Right.
Then the bank looked at other assets that they have, like Authentify that was managing authentication and identity. And then they look at Clear Exchange, which was a network to move money for your bill pay. When they look back, step back and look at it, they realize if you integrate these three components, these three companies together that are owned by the bank, then you could actually create a real-time payment network. You have the piece to move the money, you have the piece to do the fraud risk detection, and you have the piece to identify the user. They had all these elements, but they were not integrated together. So when they did that, then they created a new product.
But what was the stimulus that spurred them into integrating these things? There must have been some kind of pressures.
There is always the discussion.
What was it, the fintechs?
It was addressing a new generation of customers, millennials, that they don't know usually where is the branch for the bank. They do everything online, so they have to figure out, like, you tell them, go and open a bank account in your local branch. They may take an Uber and drive around for 2 hours before figuring out where is the branch. So I think that was like this new type of demand, like digital banking, online banking, and the need to use the data that you have actually to support this digital experience was what actually brought them to look a bit outside of the usual brick and mortar type of business. And then that was also the need of this new generation that don't do business or banking as usual.
Okay, so there were things going on in the US market which caused the banks to come together and act rationally. In most other jurisdictions, it's regulatory pressure which is causing the banks to move on these instant payment networks, immediate P2P transfer, this kind of thing. In most other places, it's a regulatory pressure. In the US, there is no body capable of applying that regulatory pressure, right? So in the US, the Federal Reserve can recommend, but it can't make the banks do any of these things.
No, and I think if you look at the market was a bit different too, right? If you're a bank in the US, the one that can put pressure on you, they are named, like Facebook, Amazon, Google. In China, you have like WeChat, WhatsApp, whatever they have platforms, and they build this platform and become relevant, and they're actually the one destination for the user, right? Messenger in the US is getting there too. So that put a different pressure that doesn't come from regulation, but comes from another industry. Right? When I was talking about, innovation, you take something from another industry and make it better. The big Google and Amazon and Facebook of this world are extremely good at taking other piece of technology from other industry and making them their own.
Well, so that leads me to, so Anthony Thompson this morning said that open banking was going to change the banking industry, and I'm sure he's correct about that. But the way it's going to change it, I think, is much less certain. Because I think perhaps a little while ago, people in this audience would have thought, if we can move to a more open banking infrastructure, whether because of regulatory pressures or, as in the US, the presumed impact of the internet giants, however it came about, moving to an open banking infrastructure would mean fintechs would have more opportunity because they would then access the banking services and you would have what people call the challenger banks, like Atom, would also be able to access that banking infrastructure. But I think behind your answer is another vision of the future, because what that says is in the open banking environment, it isn't about the incumbent banks competing with the fintechs or with the challenger banks or whatever you call it. I mean, perhaps niche banks might be a better word for them. The real competition isn't with banks at all. The real competition is with those giants who can take the data, the sort of, if they take that data away from the banks, then the banking business is really on very thin ice, I think. So if the banks are able to integrate in the way that you have, where can they go next? I mean, P2B payments is, I'm guessing, a start. Where can you go next to defend against the Amazons, the Facebooks, the Googles?
And I think actually there will be competition, but there will also be, you will see like partnership and agreement coming in the future. There was a presentation yesterday by someone that was talking about like passport for humans and passport for bots, right? Strong identity. Well, I don't remember the person presenting, but anyway, I was half asleep. That was a very bad presentation. But the bank have a set of data that is unique, right? They have trusted, verified data that relates to an important fold of your life, which is the financial life, right? The big tech companies have a big set of data that relate to your online social activity and maybe your purchase, but they don't have some of the data that the banks control. For example, early warning, we provide actually data for background check. We provide data for credit report. We provide data for insurance enrollment. We provide data for a lot of industry and services that are outside of what would be a normal banking business. When you have this type of data and you go back to the next, we were talking about open API, now the banks can become actually a hub to provide this trusted, needed set of data to say, verified human, in a scope that these tech companies may need to actually make a better experience on their own platform.
Okay, well, let me push you on this fintech issue in a different direction then. So if the fintechs are to have some new opportunities in this new kind of open banking environment, it can't be things that, I mean, never mind, look, if you're Atom and you're competing with the existing banks and their terrible customer service and their outdated legacy infrastructure, then you have a chance. But when you're competing with Amazon, who do understand the customer experience, who don't have legacy infrastructure, who do understand APIs, you're in a different competitive space. So what can the fintechs do that can work in that environment?
I think that's where like the fintech, the startup, the entrepreneurs trying to have new ideas should actually try to get close to, I would say, like the bank consortium or group and figure out how to use this data to actually enrich the experience that someone could have on Amazon.
Right.
You're not going to kill Amazon.
Right, exactly.
It's not going to happen. However, you can provide experience by leveraging both solution and running on the platform of whoever you want. I'm not going to say like you should not be in the fintech world because it's the potential may be limited from a product point of view. You don't have like many services you can build together. However, the data, if you can set that up and then go on the top of a big platform, Messenger or like WeChat in China, and deliver an experience that make it a bit different. Everyone loves to be a VIP, right? I have Amazon Prime. Do I feel like a VIP because I have Amazon Prime? Not really, because not everyone can get Amazon Prime. However, I would love them to start making recommendations to me that are a little bit better than what I'm seeing today.
But I'm trying to get towards like the strategic context for open banking and the competitive dynamics within that. So it sounds to me like we're moving from an environment where the fintechs saw themselves as being able to compete with the banks and take away some bank businesses. And we've seen a few examples of that. In fact, we saw a couple this morning. But in general, if I'm understanding what you're saying correctly, is the fintech opportunity is to work with the banks, because the banks and the fintechs together are the only way of defending against those giants coming in and taking the business. Is that too dramatic a way of putting it, or do you feel that kind of cooperation is necessary?
I'm not sure about the word defending against, right? I think that you have two tracks, and they may collide at a point of time, right? You have the big giant tech giants, and you have the bank fintech partnership that can happen. The challenge is to figure out when are they going to connect and where they are going to connect. That is where actually fintech startups should focus and figure out, like, can I anticipate that and provide a product that's going to allow me to jump in whatever sector I want to be. So if you can, in your mindset, you can figure out to do it. There is also, by the way, like we should define maybe open, right? Like we were talking about that with Dave earlier. I still love the definition of Linux. When Linux was released, everyone just like, ooh, it's open and it's free. The true definition of open in that case was the entrance to the bar, if you use that as a bar, was free. The drinks were not. So if you're a fintech and you work with banks, that's what Open API can bring. You can have access to data. You may have to maybe pay a little bit for them or no, but you can also monetize them, or the service or the product you're putting outside of the door, can monetize that later and using actually some of the platform, distribution platform. In that case, that could be the App Store, that could be Amazon, that could be. So it's how do you take advantage of both, right? The bank industry, as a fintech, bank industry have very rich, verified, trusted data.
All right,
the big tech company is a distribution channel if you're the small guy.
All right, let me challenge that vision of the future in another way then. Can the banks be open enough for the future, right? Because Zelle's fantastic. So now I can send money from a bank account to another bank account, It's free, is it, for consumers?
Consumer, it's absolutely
For consumers,
free,
it's
yeah.
free. So I can send money from anywhere to anywhere else for free, and it's instant.
Real time, yeah.
Right, and Bitcoin, it costs $40 and takes like 2 hours. Yeah.
Yep.
So you've already seen off that competition. You don't have to worry about that. But it's possible that people playing around in the blockchain cryptocurrency space may come up with some alternatives, which are, in a sense, more open, because they don't require any regulatory constructs or permissions. So can the banks be open enough to survive in that more competitive future?
And I think that's when we go back as the less impact or influence regulators are trying to get, the more you can get solutions actually that will help going in that direction. Let's talk about an example, right? Can the bank be open enough? Everyone is talking about Hyperledger or distributed ledger or whatever you want it to be. Is that something that I think is relevant for payments? Probably not. However, is that something that is relevant maybe to keep track of a person, a user, an ID, or validate someone that wants to do a transaction in, I don't say anonymous way, but an unidentified way?
Yeah,
and you can still validate that. Where are you going to get the source of trust that you need to complete that process?
Well, you think the banks can be the only place that can provide that?
Heavily, yes.
Oh, well, look, if I wanted to decide whether to trust you, like if I'm going to lend you some money, and I'm like thinking about whether to do it, I could probably look at your LinkedIn profile and figure out whether to lend you some money. I mean, do banks really have this command position any longer?
On where it's going to go? Again, it's how do you create, and I'm always looking like, we can think about the big future and how it's going to be changed by the big tech company. Or we can think about innovation as Zelle, for example. The goal was not to send someone on Mars. The goal was to build a rocket that was powerful enough to go to the moon. So you have to look at these steps and how you get there. If you want to have another, I'm going to use another analogy of innovation, right? Is either as a fintech entrepreneur, you can decide that innovation is you drop someone in parachute in the middle of the jungle and you say, we'll see you in 5 years, good luck, maybe, because we may not find you in 5 years, try to survive. Or innovation could be you give a machete to one of your guys and say, start hiking the jungle and we follow you right away.
Yeah, but like the bank and fintech thing, that's not like innovation in other areas, because this is innovation in a heavily regulated environment, but where the regulators want the banks to, I mean, I'm paraphrasing it, but the regulator position, generally speaking, particularly in Europe with PSD2, and certainly in the UK with the Competition and Market Authority, the regulator's position is, hey, listen, you banks, you have a very special position in society. You're given the privilege of credit creation, and you have, all of this regulatory moat that protects you from all sorts of competition. So in return for that, you should have to provide services which are more beneficial to society in return for that privilege. And actually, open banking is a way of doing that. If the regulators thought that the banks would come up with these new services on their own, they probably would be more sanguine about letting them do that. The open banking regulatory pressure is because the regulators don't think the banks will come up with those new services by themselves. I guess what I'm pushing you on is, it seems to me as an outsider that regulatory pressure for open banking might not necessarily result in what the regulators think, which would be this flowering of fintechs building on top of the platform you're building. In fact, the pressure for open banking could simply hand, the surpluses from the banking industry, just hand them over to Google and Facebook. Because the truth is, the average person accesses the web through Facebook. I mean, you and I are tech, so we think of the internet and the web, but for a big part of the world's population, it's Facebook. And if I can send you money in Facebook, if I can get a loan in Facebook, if I can buy insurance in Facebook, I'll never come out of Facebook and run some stupid banking application, whatever the user experience is. So I guess I'm pushing you. I mean, I like your idea about maybe the banks don't have to do radical invention, they have to do better integration. That seems to me like a pretty sound strategy. I guess what I'm curious about in front of the audience here is whether that strategy is enough. Because the alternative, Wired magazine in the UK just before Christmas published a very interesting piece about the potential impact of open banking. And they said the impact of open banking is so great that one of the big banks could actually go under because of it. And the reason being because open banking, in a sense, reduces the banks to pipes. And pipes is an operationally efficient business. And if the banks can't be operationally efficient enough to run those volume pipe businesses properly, they'll just have to drop out. So I guess the challenge, and I want a positive message from you for the people here. The challenge is for those legacy incumbent dinosaurs. Actually, I have another word for them, which is customers. So should I say that? For my customers, for those legacy incumbent dinosaurs, is your integration strategy in the face of this open banking challenge going to be enough for them to survive? Or really, are they going to have to come up with something really much different?
I think, and again, I can't really...
I mean, you're the big I am with my, oh yeah, we did 75 billion and we have 1 million. I mean, yeah, okay, that's now, but, you know, is that long term?
Yeah, I think like if you look like, and again, you're the expert on Western Europe, I can just look at what I think the bank from Western Europe should be doing is, they've been competing against each other and sometimes they've been cooperating. I think open banking, what it's going to do is actually it's going to get the bank to even work closely together even more than before. And that's actually, they may be able to spin out their own fintech companies. If you look at early warning, technically we are a fintech company that's been owned by the banks. So what's going to happen is that you will probably see like new players on the market. They won't be like real startup, but they will have access to things that were highly kept behind closed door before.
So,
right?
so an open banking environment, if the regulators construct an open banking environment, that actually could be very beneficial for the banks because it will force them to have to deliver this more integrated service platform out to that market as a whole. So that's an argument for saying actually banks shouldn't be quite so nervous about the transition to open banking. In some ways, they should be quite positive and optimistic about it.
And you have to look, that's going to drive to open API, that you're going to see like things like, we have Visa as a partner, MasterCard was doing the same thing. They have their own API program. They're opening their technology. And what is the biggest value behind these APIs? That's the data and the knowledge that they own.
That's a very fair point.
So,
well, listen, Seb, I just want to say in front of the people here, you didn't know what questions I was going to ask you. He wasn't reading from a pre-prepared, you know, corporate PR. I know it sounded like that, but he wasn't. He really was answering those questions himself. You're a good sport for letting me challenge you so hard on this stuff. It's a fascinating area, open banking, because nobody really knows how it's going to pan out. Thanks very much for coming here and sharing the US experience with us.
thank you, and Dave, thanks again for coming on stage.
No, not at all. Thanks very much, guys.
Thank you, gentlemen. Thank you.